Good morning, Paul Georgi from Allendale. It's August 8th, Monday morning. Well, we've definitely got some pressure in the commodity markets this morning, all of it because of the downgrade of the U.S. debt to a AA plus from the AAA. First time in history that the U.S. debt has been downgraded, and that's caused panic liquidation around the world. We've seen stock markets in China, in Europe, all under pressure here this morning. We've also have got gold market that is up $56 as we speak, over $1,700 an ounce. That's causing and that's the safe haven that the traders are heading for here this morning. What's happening in Washington since this downgrade is normal. A bunch of finger pointing from the Democrats to the Republicans to the Tea Party followers. It's all your fault, and that doesn't accomplish anything. And the market's showing the kind of respect that they've got for that kind of attitude by selling. And crude oil market under a tremendous amount of pressure here, almost down 400 points as we speak. The ECB has decided that they are going to buy some of the bonds from Italy and Spain, which could stabilize that situation some, but it also creates concern in the investors' eyes. The other news that's affecting the grain markets, which may not mean much here today, is the weather. We did have a little rain across the southern part of the Corn Belt, although a lot of areas got nothing here over the weekend. Some areas got up to a half an inch, which, talking to producers this morning already, has said that they feel like that can be helpful to the soybeans. But the corn is pollinated, and it is damaged to the point of no return. So with that, we've got the USDA supply demand report out on Thursday morning at 7:30, and yield factor there is going to be extremely important. Is it going to be 155 or 158 like the USDA had last time? We think that they could lower it down to the 153.5 area here on this next report. So the grain markets, I think, should be supported on breaks based on fundamentals. However, when you have the momentum of fear in the marketplace like we've seen, and you've had a huge open interest by the funds and speculative interest, that could take this market lower than what it should be, simply because of the liquidation and the fear in this market. So we need to watch that very closely. But on the fundamental perspective, we've got still crop conditions that are not improving for corn throughout most of the Corn Belt. We do have crop conditions reports out this afternoon that's going to be monitored very closely as well. In the livestock trade, cattle traders and cattle producers actually had some good news on Friday. Packers came out and paid anywhere from $3 to $4 higher for cattle, up to $113, $114 for a few cattle in Texas. Most of the cattle in the southern plains were in that $112 to $113 range. In the north, we had dress trade cattle were bringing in that $178 area. Cutout values didn't do much, however. We had the choice cutout down 84 cents. Select was up just 1 cent. In the pork complex, hogs were higher on Friday. We had the cutout up 77 cents. Futures, however, were weaker on Friday, and we're expecting that futures are going to be under pressure here in both cattle and hogs this morning, as we see liquidation there as well by funds, because they had built up a nice long position, increased their positions in hogs sharply because of the demand potential from South Korea and China, which we believe is still here. But the overshadowing market impact is going to come from the liquidation, and how much selling do we see by funds as they try to pull in their reins and get a handle on what kind of cash position they have left. So that's the focus here today, and probably will dominate the market most of the session. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'll be happy to answer any questions that you have. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.